But moving on then, at a time when infrastructure players in India are reeling under a growing debt burden, the road sector offers an almost literal avenue of escape, with the ministry keen on awarding more road contracts and fast-tracking the revival of stalled projects. Players are rushing to get their houses in order. CNBC TV 18's Rituparna Bhuyan as well as Naveen Shetty report.
25,000 crore rupees. That's the total value of road projects that the Road Ministry aims to award in FY17. And the real good news is that this is nearly 2.5 times the value of projects awarded in FY16.
I really feel that there is a lot of work to be done, a lot of challenges, and provided we can get the clearances fast enough from the government, and provided we can have a lot of policy issues resolved through government, I think we should be able to rise up to the occasion.
Expectations of such an ambitious target has had road infrastructure players on their toes for a while now. The main focus of their activity in the last few weeks has been shoring up their capital to ensure work on new projects is not delayed. More of these players have been exploring multiple options, from IPOs to InvITs to even issuing debt instruments.
We have our IPO on radar now, and we have created a separate holding company for roads, which is Essel Highways Limited. This company will go for IPO in next 12 months or so. A new option which has become suddenly attractive is InvIT, because now dividend distribution tax has gone away. So I think between these two options we'll look for one, and the amount will be decided as we move.
In addition, companies are keen on streaming their balance sheets by getting rid of existing debt before taking on new projects. To this end, companies have been putting their operational assets on the block. Estimates suggest operational roads worth $10 billion are up for grabs, with some of them quoting at less than book value. But even then, deals are difficult to finalize.
Look, I would classify into the two buckets. One is valuation, and like any M&A deal in any sector, the buyer and seller need to agree on a valuation, and that remains in this sector also. And secondly, the due diligence, and there are some specific areas of due diligence in this sector. You know, buyers review the concession agreement, they are happy with the terms of the concession agreement, whether the technical assessment, whether the assets and roads have been maintained properly, and so on. So these are the main areas.
The NHAI says it is aware of this problem and is looking for ways to make funds more readily available to these players, going so far as to ask that road projects be bought under the ambit of priority sector lending. Meanwhile, the NHAI is also working on various new business models to make its aggressive targets achievable. And while the build, operate, transfer model has so far been the most popular, it is exploring more innovations in public-private partnership models. In addition to keep itself ready to go ahead with such projects, the NHAI itself is looking at raising funds, 60,000 crore rupees to be precise.
The challenges for financing our highways remains. We draw our funds largely through the cess which the government imposes on sale of fuel, on toll collections which have constantly been improving, and also on bonds. So that's another area of opportunity, because this year, keeping in view the large program that we have before us, we expect to raise about 59 or 60,000 crores worth of bonds.
All this sounds hunky-dory. More so, with foreign strategic investors, asset management companies and even private equity players showing interest in Indian road assets. But experts point out that until serious steps are taken to address this mismatch in valuations and legal hurdles, funding will remain a major problem for the sector, and the road to recovery will be peppered with speed breakers and potholes. With Rituparna Bhuyan in New Delhi, in Mumbai with Naveen Shetty, Kritika Saxena.
Alright, with that we come to an end of this edition of Business Saturday. Stay tuned to CNBC TV 18 for a slew of weekend programs lined up.